Okay, so welcome to Buzzing Being Drone and Company capstone presentation to the Board of Trustees. This is presented by Company B's management team, myself, Elena Jones, Allie Winkler, and Asia Elijah is on the call with us today. So throughout this final capstone presentation to the Board of Trustees, the management team of Buzzing Bee Drone and Camera Company will be displaying the full outline of our company's success throughout the 14 years of business the drone and camera company has been in the industry. Throughout these 24 slides, we have displayed the full management, marketing, and finance decisions that has led our company to have a bigger advantage into our industry. Some of these slides will also display future predictions the company intends to hold to stay on track and excel past our competitors. So let's go ahead and get started. The first 4 to 9 slides will be a review of our financials performance. And what I have here is the trends in our total annual revenues throughout the 14-year span. Below, we have included a financial chart from our performance highlights in the Glo-Bus simulation. The chart describes our company's total revenues throughout the 14 years our business has been active. And revenue is basically the total amount of income generated by the sale of goods or services related to the company's primary operations. And below you can see how Buzzing Bee's revenues have slightly increased over the 14-year span. The cameras and the drones between the blue and red lines, you can see how they've both kind of stayed steady. But once year 10 comes around, they've started to go up and fluctuate together. And the total has really stayed steady throughout the 14-year span. Here we have the trends in annual earnings per share. Earnings per share is a measure of a company's profitability calculated by dividing quarterly or annual income minus dividends by the number of outstanding stock shares. The higher a company's EPS, the greater the profit and value perceived by investors. We have had trouble increasing our EPS over the first 5 to 8 years of being in the industry, but as you can see below, we began to increase these numbers from year 9 all the way to year 12 by increasing our net profits.
Trends in the next slide is trends in annual return on equity investments. Return on equity is the measure of our company's net income divided by our shareholders' equity. ORE is a gauge of corporations' profitability and how efficiently it generates those profits. The higher the ROE, the better a company is at converting its equity financing to profits. This is an area our company has struggled to increase through the years of competition. So in our graph, we started between 5 to 0%, and it slowly fluctuated to 20%, and then it had a steady increase to 40%. We did decrease slightly to year 7 and 8, and it was still a decrease, but a steady decrease between 8 to 9 to year 8 to 9, and then an increase to year 10. And then it's had a steady pace. Between year to 12 to 13, we did decline, but we realized what we were doing. And year 13 to 14, we have increased. The next slide is trends in annual credit ratio. Our company credit ratings are a function of 3 factors: the debt equity percentage, the interest coverage ratio, defined as annual operating profit divided by annual interest expense, and the current ratio, defined as current assets divided by current liabilities. As you can see below, The Buzzing Bees credit rating has stayed solid throughout the last 6 years of performance. A few ways we have maintained this rating is to increase the ending cash balance each year. We did this by reducing financing expenditures like dividends or stock buybacks, or by generating better cash flows through operations. So the graph that you see is our company increasing, and then we also had a steady increase by the ending of by year 10 to year 15. On slide 8, trends in the year and stock price. Stock price is the amount it will cost to buy one share in our company. The company of a share is not fixed but fluctuates according to market conditions. It will likely increase if the company is perceived to be doing well, or fall if the company isn't meeting expectations. So you may ask, what makes stock price important? This is a question our company determined in the final years of being in the drone and camera industry. A company's stock price reflects investors' perception of its ability to earn and grow its profits in the future. If shareholders are happy and the company is doing well, as reflected by its share price, its executives are likely to keep their jobs and receive increase in compensation. Below, we have displayed a final chart detailing the fluctuation between Buzzing Bean stock price through 14 years of business. And again, we started off with a decrease, and it became steady. And then we figured out what was going on, and it increased. We did see a dip in the decrease, but we also corrected that to make sure that between year 13 and 14 increased. On slide 9, trends in an annual image ratio. The image rating is a function of our company's PQ ratings for action cameras and UAV drones. Our company's global market shares for both action cameras and UAV drones as determined by our market shares in the 4 geographic regions. Based on below's chart, our company image rating is all over the place throughout the years. There are many ways to improve this, but one of the ways we discovered was to fluctuate between our cameras and drones PQ rating. And again, this graph also shows where we declined, where we increased, declined, and increased. And our for slide 10, overview of performance targets, that is slide 11 to 13. Thank you.
With that being said, we have come up with our own strategic vision, which at Buzzing Bee Drone and Camera Company, our mission is to make the power of interactive drones and cameras accessible and productive for everyone. Buzzing Bee drones and cameras capture eye-catching views only a bee can see flying through the air. We strive to be the most innovative and successful provider of aerial photography and videography services in 4 competitive regions. We see our mission heading towards developing and delivering the highest quality, most inspiring, and innovative drones and camera technology experiences to the next generation of visionaries. We hope to transition customers from being passive individuals of technology into tomorrow's creation and innovators. To the side, we have included a strategic vision triangle that we followed to create this vision statement.
I'm going to be going over the performance targets for EPS and ROE. Here you'll see the year 12, 13, and 14 stats for the sales forecasted and the actual sales for both earnings per share and rating of equity. Our EPS has fluctuated, steadily increased. Besides year 13, we dropped a little bit. We dropped by $2.34 per share. Luckily, we came back in year 14 by increasing, and we increased by $4.73, which led us to $12.68. And then for our ROE, we steady in the beginning. We achieved the expected ROE with some fluctuation. We boosted our ROE by increasing our net profits. That was one of our focuses throughout this whole simulation. Sales forecasted and a projection of future sales revenue and a prediction of which deals with move through, the sales cycle. Actual sales are the production or are the product and services sold by a firm during a period of time. And again, above is the EPS and ROE for our company. You want to go to the next slide, Alana? Thanks. And here you'll see the performance targets for credit rating, image rating, and stock price. For credit rating, these are the functions of credit rating, which are the debt quality percentage, the interest coverage ratio, and the current ratio, discussed a couple of slides back. Our credit rating has been consistently at an A+ since year 9. Image rating, effects of image rating would be the PQ ratings for action cameras and drones. Our global market shares for both AC and UAV drones, and then our actions to display corporate citizenship. And our image rating has fluctuated an average of 5 points. Our average image rating is 70, which is a little bit lower compared to some of our competitors, which we did steadily increase that through the simulation. And then the stock price, these are based off of our cost-effective strategy. Cost-effective strategy relates to the reduction in cost of a production without hindering the quality of the product or service. Our stock price has consistently stayed below at least 2 other companies throughout our business. So I would say we're pretty average on our stock price. And then the next slides, 15 through 19, will be an overview of the company's strategies.
So throughout this slide, we have determined what our competitive strategy for our AC cameras are. And we have displayed a map where all of our global markets are regioned in, which having a competitive approach is technically the most important when a company has competitive markets. And several similar products are available for customers. This strategy helps you create a defense position in your industry along with generating a superior return on investment. And below that map, I have included the total AC cameras that have been sold throughout the 14 years of being in the industry. And as you can see, the units sold versus the market share, they've kind of stayed in the same type of flow, but our market share definitely decreased the most from year 8 to year 9, which we then corrected with our units sold moving upwards into year 12 to 14. And also to the side of that, we've included a chart based on these predictions for the 4 regions that our cameras are in. These global markets are included with these regions as well. And like our cameras, our drones also have a competitive strategy throughout these 4 global markets, which equally having a competitive approach is the most important when a company has a competitive marketplace, and several similar products are available for their customers. This strategy helps us create a defense position in our industry along with generating a superior return on investment. Below, we also included our UAV drones that have been sold, and it's almost similar to our cameras, almost exactly similar to our cameras, which is how our graph in the 4 global market regions has fluctuated very, very similarly, which has shocked us.
The next strategy is production strategy. And I think production strategy is an amazing strategy within our company, just due to the fact that we'll be able to see how things are when it comes down to items being sold, how much we're receiving back in profit. So production strategy is a different method a company uses to plan the future production of goods and materials at a manufacturing plant. Implementing various production planning strategies creates a foundation that can help determine how much each project to create. Our production strategy, the chase production strategy. Many businesses that have a perishable or seasonal items use the chase strategy and produce items as they are needed by consumers. This lowers inventory costs and keep the number of wasted products to a minimum. The chase strategy refers to the notion that you are chasing the demand set by the market. Production is set to match demand and doesn't carry any leftover products. This is a lean production strategy, saving on costs until the order is placed. The advantage of applying the chase strategy is that this strategy permits organizations to use the lowest number of service providers, potentially saving the organization a considerable amount of money. The chase strategy tries to match the demand and capacity of a service from period to period. On slide 18, workforce compensation and training strategy. I do believe within our company or any other company, having a workers' compensation and a training strategy will make our employees stay within our company and not want to leave, because one of the things that they do want to make sure they have is benefits. So in our company, we want employees to feel that they are being treated right. At Buzzing Bee, we will make sure our company receive benefits, worker compensation over time, and time and a half. Also, if employees are working on holidays, they will work a half day and be paid time and a half, including holiday pay. For example, if their starting wage is $14 an hour for a holiday and working a half a day, they will be making $17 an hour. Another example could be our employees earning a pay increase every year. They work with the organization up to the maximum salary allocated. Many organizations also use competitive rates to determine raises. This is when you adjust your pay rates to remain competitive in the job market. We believe that this is a good training strategy and a good ethical decision because we want our employees to feel that they are receiving a fair pay while working those holidays. Also, if an employee is injured on a job, that employee is responsible to getting a medical evaluation and will have a medical professional filing out company documents by the employee. Doing that, we can see that the employee is acknowledging that they got hurt on the job. So we as a company can make sure that each employee is compensated fairly. This shows great ethical employer behavior for Buzzing Bee. On slide 19, this is a chart of our income statement, which I believe is our balance statement between year 9 to 14. This shows how much money is coming within our company with our net revenues with the AC cameras and UAV drones. This also shows our cost of units, our delivery, marketing, administrating, and total operating profit. This also shows our pre-tax profit, income tax, net profit, earnings, dividends, return on average ROE in our shares of stock, and our total shareholder equity. By showing this income statement and balance sheet, it shows how much money is coming within our company and how much, and we are also able to see what money is leaving for our company. This also shows us having a great ethical management behavior within our company, so we can see how much we are gaining as far as profits. And if we was to have any type of business partners, this will also show great ethical behavior with investors and partners with neighboring competitors or neighboring companies, showing that we as a company can keep our profit and also can make sure that our profit increase each year. And the next slide is 21 to 23, and it's an overview of Buzzing Bee's rivals company.
So for our strongest and closest competitors for AC cameras and UAV drones, I would say between both of them, Company D, Digital Views, would be our highest competitor. they were consistently in first place, and they also made great financial decisions that we kind of followed and based our movements off of theirs, just so we could see how that would move us up. And it did some. So I would say the cameras, the company A would be our second competitor for our cameras. And we were pretty close in our numbers with them. And we kind of did that same thing with watching what they were moving, kind of basing ours off of our movements off of theirs. And then for our drones, again, I would say the digital views would definitely be our top competitor. For our drones, along with Company C. We were kind of back and forth with them for a little bit, traded places a little bit. We toggled off of their movements as well. We kind of did that with everybody, just to see like what we were moving, what they were moving to increase, and what we could also take from that as well. I would say that overall, this was like a great simulation to definitely see how to go back and forth with rivals in companies, so we can use that going forward and getting above our competitors. And then our next steps for AC cameras, our next step in competing with Company A would be to increase our net profit. To increase our net profit, we need to decrease our operating costs and increase our prices. We are a little bit below average for prices. We go off of that cost-effective strategy as well. At the end of year 14, Company A brought in $39,952 between both cameras and drones. More in profit than Buzzing Bee. We were $39,952 more in profit than Company A at the end of year 14. And this will give us an advantage to pass them on the rankings for next year. And for UAV drones, Buzzing Bee's geographic operating benchmarks show that we are below average on operating costs. Operating costs are the expensive in businesses for day-to-day transactions, which would be cost of goods sold, administrative expensive, marketing costs, and delivery costs. Keeping our operating expensive at a minimum will allow us to keep our prices lower than competitors, which will help us increase our net profit. And then we definitely have learned a lot through the simulation with all of the ups and downs. The Glo-Bus simulation was definitely a learning experience. It taught our company how to come together and use teamwork to make Buzzing Bee company profitable in every area. In order for us to become a successful company, we had to work together as a team to identify the appropriate strategies. In the beginning years of the simulation, we were in last place, and that's where we kind of stuck for a minute. We adjusted the AC camera and UAV drone marketing to stay within an average limit throughout the regions. We did increase our earnings per share and rate of equity, credit rating, image rating, net revenues, net profit, and ending cash. We made a comeback in year 11. We went from fourth place to second place, which I think it kind of shocked everybody, us included in that. We did work really hard to get there. By doing that, we did increase our warranty period to 180 days for all regions for both cameras and drones. We learned that the warranty period is essential for customer satisfaction. It gives them longer to test out our products to see, yes, it is worth what the market price is selling it for. Year 12, we slipped back into third place. We increased our advertising budget, retailer support, and website displays as we were watching our scoring measures increase by doing so. We finished the simulation in fourth place. We got behind again at the last little bit, which made it a little bit hard to fully come back from, but focusing on the performance measures increasing as we were making our decisions, that helped us focus and get back to second place and third place and just slip a little bit at fourth. This is how increasing increasing our performance measures is how Buzzing Bee Company makes over $1 million in revenue. It was an overall great experience, and we enjoyed learning how to put forth the efforts in competing with our strong competitors.
So, in regards to this presentation and in conclusion, now that we have completed 14 years of service, our team has fully examined different areas of business that was completely new to our understanding as beginning co-managers. Throughout these leading years, we have collectively obtained the information of our company's full outlined successes throughout the simulation of a Glo-Bus business. Displayed throughout this capstone presentation, our full management, marketing, and finance decisions have shaped our company to the business that it is today. Presented through this final presentation is our employed strategies of global differentiation and focus to each success of material. We believe that these strategies set our AC cameras and UAV drones apart from rival brands based on each such attributes as providing a higher PQ rating, more models, more advertising, longer warranties, retailer support, sales promotions, and website displays. Throughout these years, we have learned lessons in crafting winning strategies that have made us question what we as a company managers should or should not do for our brand to be financially and competitively successful in the head-to-head battle against scrutiny managed rival companies. Though we ended up placing in last in our industry's division, we still see our mission heading towards developing and delivering the highest quality, most inspiring, and innovative drone and camera technology experiences to the next generation of visionaries. Thank you for listening.